Okay, let's unpack this. Imagine peering into a crystal ball. Maybe not for just a quick look, but for a really researched forecast of the crypto market's final act this year.
Hmm.
What if one of Wall Street's most respected analysts, someone with a serious track record, made well, a monster prediction for Bitcoin and Ethereum for the end of the year?
Right. A monster prediction. That definitely gets your attention.
Exactly. We're not just talking about, modest gains. We're talking about a potential game changer, something that could really shift the narrative around digital assets.
Yeah, fundamentally reshape how people view them.
So what would that actually mean for your portfolio, for the whole Web3 space, and, well, for the future of digital assets as we know it? It's a huge question, really.
It definitely ripples out.
And before we dive into whether Tom Lee's bold monster move prediction for Bitcoin and Ethereum might actually come true, here's where it gets really interesting for us. If you find value in these deep dives, these crypto insights, please take a moment to like this video, subscribe to our channel, and maybe hit that notification bell too.
Yeah, that really helps us out.
It's a huge help. It supports the channel directly, boosts our visibility, in the algorithm so more folks can find this research.
And lets us keep bringing you this kind of content, which honestly, we put a lot into.
Absolutely. Your engagement, it really makes a tangible difference. So thank you for that in advance.
Definitely appreciate it.
Right. So today, we're taking that deep dive into Tom Lee's prediction for what he's calling a monster Q4 for both Bitcoin and Ethereum.
Monster Q4, okay.
And to give you the full picture, we've gathered insights from, well, a pretty solid stack of sources. We're looking at reports from Yahoo Finance, CoinShares weekly fund flow updates, always valuable.
Always insightful, yeah.
Lastnode's on-chain analysis,
Yeah.
digging into BTC and ETH data. Fundstrat Global Advisors themselves, that's Lee's firm, of course.
Right, straight from the source.
And also Masori's quarterly state of crypto reports to round things out. We're really aiming to dissect this from, well, every angle we can.
So our mission today really is to equip you, our listener, with more than just a summary. We want to help you understand not just what Tom Lee is predicting, but why his voice actually carries so much weight. Bridging that gap between traditional finance and the crypto world.
That's a key point.
We'll look closely at the specific macro catalysts he's pointing to, the fuel for this potential rally. We'll delve into historical precedents, things that might support his view.
Right, see if the past lines up.
Exactly. And crucially, we'll also shine a light on the risks and the caveats. Because, nothing's guaranteed.
Definitely not in crypto.
So ultimately, the goal is to give you the knowledge to critically assess this forecast yourself, make informed decisions for your own portfolio, your own involvement in Web3.
Okay, perfect. So let's start with the man himself. Our crypto crystal ball today is being polished by Tom Lee. But before we get to the monster move, who is Tom Lee, why should we pay attention when he speaks about crypto?
Right.
In a market that's, let's be honest, often full of noise, knowing the source is critical, isn't it?
Absolutely. And what's immediately striking about Tom Lee is, well, he's not just another crypto commentator or influencer you see popping up everywhere. He holds a really distinct position. He's the co-founder and head of research at Fundstrat Global Advisors.
Fundstrat, right.
And Fundstrat isn't just, a blog or something. It's a well-established, highly respected Wall Street independent research firm.
Okay, so institutional focus.
Exactly. They provide deep market analysis, equity strategy, macro insights, mostly to institutional clients. Think big hedge funds, asset managers, corporations.
Right.
So this gives Lee a very different kind of platform and perspective. His work is rooted in rigorous, data-driven analysis. He uses established frameworks that have guided, multi-billion-dollar decisions in traditional markets for decades.
So a different approach than maybe some crypto-native analysts.
A very different approach. He's known for meticulous research, a quantitative bent in traditional finance, building a reputation for accuracy over many years. This track record lends immense credibility, even when he talks about something as volatile as digital assets. He's not just looking at charts, he's applying this holistic macroeconomic lens.
And he has a history in crypto too, right? He wasn't always just TradFi looking in.
That's the other critical piece. He actually gained significant credibility within the crypto space itself during past Bitcoin bull runs.
Okay.
He was one of the earliest, most vocal Wall Street strategists to turn bullish on Bitcoin. He made some timely and often remarkably accurate forecasts when many others in traditional finance were, frankly, still quite skeptical or dismissive.
Like when? Any examples jump out?
Yeah, for instance, he pretty accurately called Bitcoin's breakout above $10,000 back in 2017, and he stayed bullish through a lot of volatility, often giving targets that seemed really ambitious at the time but ended up being, well, pretty close.
Right.
So this history means his statements aren't just for retail. When Wall Street analysts like Lee talk crypto, institutions listen. Really listen.
Yeah.
It can signal a potential shift in sentiment among the big money players. That's why his words carry so much weight. It can actually move markets.
That's a crucial distinction then. It's not just making a prediction, it's who's making it and the potential impact on institutional sentiment.
Exactly.
But in a market often driven by hype, by narratives,
Yeah.
how does his background, that mix of TradFi credibility and crypto understanding, really amplify his voice?
That's a great question because, yeah, crypto is often seen as hype-driven, maybe even meme-driven sometimes. So why does an analyst from a traditional background hold so much sway? It really boils down to the data-driven approach and that institutional perspective he brings. Lee isn't just looking at, daily charts or what's trending on Twitter. He integrates macroeconomics, fundamental analysis frameworks, a long-term cyclical view, things that maybe some purely crypto-native analysts focus more on, say, technicals or microcaps might overlook.
So he speaks the language of institutions.
Precisely. He bridges that gap. He speaks a language that institutional investors understand, they trust, and, crucially, they might actually act upon.
And that institutional confidence, that can have knock-on effects, right?
Oh, absolutely. The impact is profound and often creates this cyclical effect. Institutional confidence, often sparked by figures like Lee, tends to precede and then fuel broader retail fear of missing out, FOMO.
Ah, the classic FOMO effect.
It works like this. Big players validate the asset through research, maybe start investing. This de-risks it for individual investors who were maybe hesitant before.
Okay. Gives them a green light, sort of.
Exactly. Then institutions allocate capital, price momentum builds, retail sees this, feels legitimacy, jumps in.
Fearing they'll miss the boat.
Right, and this influx from both sides pushes prices higher, which then further validates the initial institutional thesis. It's a powerful cycle.
A self-reinforcing loop.
Exactly.
Yeah.
And Lee's analysis is often seen as a key catalyst, either starting or accelerating these cycles. His voice is like a signal flare. Hey, the big money is looking, maybe moving, and that signal attracts more capital.
Okay, that makes a lot of sense. Right, let's get to the main event then, the core prediction. What exactly is Tom Lee forecasting for Bitcoin and Ethereum by year end? We've heard monster move. What does that translate to?
Yeah, his prediction is pretty emphatic. There's not much ambiguity. He expects both Bitcoin and Ethereum to make truly significant gains by the end of the year. He's calling it a monster move in Q4.
Significant gains, not just a little bump then.
No, definitely not. He's signaling a substantial, impactful rally for the two biggest cryptos. Now, he hasn't put an exact price tag on Monster recently in this specific forecast.
Okay.
But his firm, Fundstrat, has previously suggested Bitcoin could reclaim its all-time high, around $69,000, maybe push towards 80K, even 100K.
Wow, okay. And Ethereum?
And Ethereum following suit potentially to new highs beyond its previous $4,800 peak, maybe in the $5,000, $6,000 range, or even higher if Bitcoin really runs.
But Q4 is the key period here, the strongest quarter in years.
That's his analysis. He predicts Q4 will be the strongest quarter for crypto in years, potentially outperforming some of those legendary end-of-year rallies we've seen before. It implies more than just price going up. It suggests a strong reaffirmation of crypto's place, attracting new capital, new attention.
A monster move sounds exciting, obviously. But beyond the price targets, what does that actually mean for the market itself? Is it just hitting old highs or something more?
Fundamental. Yeah, putting it in the bigger picture, a move like that, a monster move, would likely signify a really robust end to the year for digital assets.
Okay.
It wouldn't just be about touching old ceilings. It suggests a significant, almost like a structural shift in market dynamics and investor sentiment.
Setting the stage for next year.
Exactly. Potentially setting up a very strong start to 2025. This kind of move often reflects broader acceptance, more mainstream institutional adoption getting serious.
Moving beyond the early believers.
Right. It's about establishing a new, higher floor for prices, building momentum that could carry into the next cycle. The really profound part could be sustained institutional engagement, more liquidity, better infrastructure, all crucial for mature growth.
Especially considering the macro factors he's watching.
Precisely. It would basically be a very definitive validation of this cycle's bullish narrative.
Okay, so let's talk about those macro factors. What are the big economic forces, the catalysts that Tom Lee thinks will drive this? He's not just guessing, right? He's grounding this in economic analysis.
Right, it's based on traditional analysis applied to risk assets.
First up, he points to potential U.S. interest rate cuts. How big a deal is that for crypto?
It's potentially a very big deal. The core idea here, it's classic economics, right? Cheaper money almost always fuels risk assets.
Okay.
Potential rate cuts by the Federal Reserve mean lower borrowing costs across the economy. When the cost of capital goes down and yields on safe stuff like government bonds become less attractive.
Investors look elsewhere for returns.
Exactly. Investors, both big institutions and individuals, start looking for higher returns. They become more willing to take on risk, shifting capital away from low-yield investments, maybe even cash.
And crypto fits that risk asset category.
Perfectly. Volatile, yes, but with high growth potential. Reduced rates lead to what's called a liquidity injection. More money is actively searching for yield. Historically, this surge of capital flows into assets with strong growth potential equities and, increasingly, crypto. It's a powerful tailwind. It makes holding cash less appealing.
We saw that play out before, didn't we?
Vividly. Late 2020, 2021, very accommodative monetary policy coincided with huge capital flows into digital assets, especially Bitcoin and DeFi on Ethereum.
Right, okay, so that's monetary policy. Next, a factor that's been huge news, ETFs, exchange-traded funds. He points to demand here.
Yes, absolutely. Increasing demand from ETFs is a cornerstone of his argument. The success of the Bitcoin ETFs and the potential for Ethereum ETFs.
How significant is this, really? Is it a genuine game changer for adoption or just, a new way to buy?
Well, that's the key question, isn't it? Are they just a new wrapper or a fundamental shift? Tom Lee strongly believes it's the latter, and the data so far really backs him up.
Okay.
He talks about the potential for billions in consistent inflows from both Bitcoin and Ethereum ETFs. And that's not just hype.
Why are ETFs so attractive to institutions?
Because they offer this regulated, familiar, easy pathway for big money pension funds, endowments, wealth managers to get crypto exposure without actually holding the keys, dealing with custody, navigating regulatory hurdles.
Removes the friction.
Exactly. It removes major barriers that kept traditional investors on the sidelines for years.
And we've seen proof of this demand already.
Oh, definitely. The Bitcoin ETF approval back in January 2024, the inflows were unprecedented. Over $12 billion net inflows in the first 2 months alone.
Wow. How does that compare?
It dwarfed historical ETF launches. Gold ETFs took something like 2 years to get that kind of inflow. Bitcoin ETFs did it in weeks.
Okay, so massive latent demand was clearly there.
Absolutely, just waiting for the right vehicle. And then the anticipation around an Ethereum ETF, maybe landing in 2025, would further cement ETH's legitimacy as an institutional asset, just like BTC.
So it's not just a one-off boost.
No, Lee argues it fundamentally changes the market structure.
Yeah.
Crypto gets embedded in traditional portfolios, and these consistent inflows create sustained buying pressure, not just speculative pumps. It fosters a more mature market dynamic long-term.
Okay, that's compelling. Beyond the Fed and the ETFs, Lee also mentions cyclical and narrative factors, things specific to market timing and maybe even crypto psychology.
Yes, exactly. If you zoom out, you see this confluence of factors that have historically lined up with bullish moves, not just in crypto, but often in broader markets too.
Like what specifically?
Well, first, there's the election cycle 2024, 2025 in the U.S. Historically, election years and the year right after have often been positive for equities, and often crypto follows along.
Why is that? Stimulus.
Often, yeah. Incumbent administrations tend to want a stable, ideally growing economy around election time. So you might see policies aimed at stimulating growth, creating a risk-on feel.
All right.
It's not guaranteed, obviously, but it's a historical tendency. Presidents generally don't want slowdowns during these critical periods. This can inject confidence, liquidity, benefiting growth assets like crypto.
Makes sense. What else?
Then there's the big one, the Bitcoin halving narrative. The halving in 2024 cut the new Bitcoin supply in half from 6.25 BTC per block down to 3.125.
Right, the supply shock.
Exactly, and the effects are still playing out. Historically, the year following a halving is often Bitcoin's strongest rally period. Not immediately, but usually in the 12-18 months after.
Because demand stays high or grows while new supply is drastically reduced.
Precisely. Classic supply-demand imbalance. It typically drives prices up over time. We saw it after the 2016 halving. Bitcoin soared. After the 2020 halving, it surged again.
So it's a pattern backed by Bitcoin's history.
A powerful one. It acts almost like this built-in bullish mechanism that the market anticipates and reacts to. It reinforces the narrative for a strong end to this year and into 2025.
Okay, so we have potential rate cuts, massive ETF inflows, supportive historical cycles. If all this converges, what does it actually mean for you, the listener? Whether you're holding long-term, trading actively, or building in Web3.
Right. How does this translate into actionable thoughts? Well, first, there's that psychological angle we touched on.
The FOMO factor.
Yeah. Institutional confidence, signaled by analysts like Lee, often sparks retail FOMO. This creates that upward spiral. Institutions validate, retail observes, jumps in, pushes prices, validates institutions.
So for long-term investors, what's the takeaway?
It could signal a good time for portfolio rebalancing, maybe increasing allocation if you share the bullish outlook. Or it could be an entry point if you've been waiting.
Okay.
But crucially, it highlights the need to understand the drivers, not just follow the hype. Knowing why the market might move leads to more resilient decisions, less emotional ones.
That's a classic dilemma for any investor, isn't it?
Mm.
Do you load up now, trying to catch the wave, or wait for more confirmation and risk missing some upside?
Tough call.
Always a tough call. Market timing is incredibly difficult. Now, shifting gears to active traders.
Okay.
Lee's prediction implies high volatility in Q4, likely skewed to the upside. High volatility means opportunities in spot markets, derivatives.
More price swings to potentially profit from. Exactly. But it also means increased risk. Understanding market microstructure, order books, liquidity, slippage becomes critical. Thin order books during high volatility can exaggerate moves.
So opportunity, but requires careful risk management.
Absolutely. Tight stop losses, keen eye on order flow, all essential. It's high reward, but also high risk if you're not careful.
And what about the broader Web3 ecosystem? If Bitcoin and Ethereum surge, what happens to everything else?
That's a really important question. A big rally in BTC and ETH usually isn't isolated. It often acts like a rising tide,
Lifting the altcoins.
potentially reigniting altcoin season. That's when capital, after making gains in the majors, rotates down into smaller, more speculative altcoins, chasing higher percentage returns.
Because they feel smaller coins have more room to grow.
Right. And this rotation fuels activity across the board. DeFi, NFTs, it brings renewed interest, liquidity, developer motivation, maybe boosts user adoption.
How would we track that?
One key metric is the BTC dominance chart. If Bitcoin is rallying, but its overall market share starts to fall, that signals capital is rotating into ETH and alts. That indicates a broader, healthier rally.
That's a critical question for many, especially those invested beyond just BTC and ETH. If Bitcoin runs hard, will Ethereum finally keep pace or even outperform? Or will it lag again?
Exactly. That BTC versus ETH dynamic often dictates the health of the whole altcoin market.
Okay, now we have to talk risks. No prediction is a sure thing, especially in crypto. What could go wrong? What are the potential headwinds that could stop this monster move?
Absolutely need that dose of realism. A key point is how resilient crypto is to shocks from the wider world. Lee himself acknowledges this global uncertainty.
Like what kind of uncertainties?
Things like China's economy, its ups and downs impact everything. Ongoing conflicts, say in the Middle East, can spike oil, create instability, and U.S. politics, especially in an election cycle, can bring policy surprises.
So macro events can override crypto-specific catalysts.
Easily. A major global shock could trigger a flight to safety across all assets, pulling money out of risk assets like crypto, no matter how good the internal story looks. Crypto isn't immune to the wider world.
Okay, what else?
Well, there's that double-edged sword of institutional interest, particularly the ETFs.
How so?
Lee warns that relying too heavily on the ETF hype could backfire if the actual inflows disappoint. The market often prices things in ahead of time.
Buy the rumor, sell the news kind of thing.
Exactly. Even if the news is still good, if it's not as good as the hype predicted, you can get a correction. If those billions don't flow in as fast or consistently as hoped, or if early inflows reverse,
Market disappointment could set in.
right, momentum could stall, leading to consolidation or a pullback as optimistic bets unwind.
Got it. Any other specific risks Lee mentioned?
Yes, one specifically about Ethereum. He points out that so far this cycle, ETH hasn't consistently shown strong performance relative to Bitcoin.
Meaning it hasn't outperformed BTC as much as people might expect in a bull run.
Correct. Historically, ETH often catches up or even leads later in a bull cycle as capital rotates. But there's a risk it could lag behind Bitcoin this time, even if BTC rallies significantly.
So Bitcoin dominance might just persist.
It might, which means investors need to consider if capital will really flow strongly into ETH and alts or stay more concentrated in Bitcoin. It affects portfolio decisions. A BTC-only rally is very different from a broad market surge.
Okay, those are significant caveats. Now, to add more context, let's look back. Are there historical parallels that support this idea of a monster Q4? Has this happened before?
Yeah, and what's interesting is that historically, Q4 does have a pretty strong track record for crypto gains. It lines up well with Lee's thesis.
Really? Like a seasonal tendency?
It kind of looks that way sometimes. There's a discernible pattern over several years, suggesting strong year-end performance.
Examples.
Well, think about the 2020 Q4 rally. Bitcoin surged, what was it, 168% between September and December? Went from around $10 to almost $30.
Wow, okay. That's significant momentum.
Huge momentum. It showed how end-of-year sentiment can accelerate things. And then there's the famous 2017 bull cycle peak
Ah, yes, the big one.
that saw absolutely parabolic gains in Q4 for both BTC and many alts, peaking around December. Bitcoin went from maybe $4 at the start of Q4 to nearly $20.
A 400% increase in 3 months.
Insane. The energy, the retail FOMO, the media frenzy. It showed how fast sentiment can shift and accelerate into year-end.
So if you charted past Q4s,
You'd see some visually striking, aggressive uptrends in those years. It doesn't guarantee anything for this Q4, of course.
right, past performance.
Exactly. But it provides a compelling historical pattern that supports Lee's optimism.
That historical context definitely adds some weight. But looking beyond past prices, what about current data? What fundamental signals can we watch now to see if this monster move might actually be starting?
Great question. We need real-time indicators. On-chain data is crucial here, giving that transparent view of network activity.
Like what metrics?
Exchange outflows are a big one, when large amounts of crypto move off exchanges into cold storage.
That suggests long-term holding, not selling.
Generally, yes. It's seen as a signal of conviction from institutions or long-term holders. They're accumulating, not preparing to sell. This reduces the readily available supply.
Okay, so watch for coins leaving exchanges. What else?
Increases in active addresses and transaction volumes on both Bitcoin and Ethereum. If more people are using the networks, sending transactions, that signals growing adoption and real utility.
Not just speculative trading.
Right. It reflects fundamental network health, which is a good foundation for price appreciation.
I need macro charts to keep an eye on.
Definitely. Beyond crypto-specific data, look at macro charts. A key one is the dollar index, DXY.
How does the dollar affect Bitcoin?
Historically, there's often an inverse correlation. A weakening US dollar, lower DSY, often correlates with a strengthening Bitcoin.
Why is that? Bitcoin is a hedge.
Partly. Bitcoin is seen by some as a global, decentralized store of value, like a digital gold. When the dollar weakens due to inflation or instability, investors sometimes seek alternatives. Capital flows into assets like gold and, increasingly, Bitcoin.
So a falling DXY could be a bullish signal for crypto.
It could act as a reinforcing macro signal, yeah.
Yeah.
The global liquidity tap turning towards alternative assets.
Okay, so we've really unpacked Tom Lee's monster move prediction for Q4. We looked at why his voice matters, the potential macro drivers, rate cuts, ETF cycles, and importantly, the risks.
Yeah, from global uncertainty to ETF hype dependence and that ETH versus BTC performance question.
It gives a pretty comprehensive picture of what might lie ahead.
Which brings us to the big question for you, our listener. Considering everything, the history, the catalysts, the risks, do you think Tom Lee's call is right? Will Bitcoin and Ethereum actually explode in Q4? Or are there just too many hurdles?
Yeah, we really want to know what you think. And if you do think he's right, if that monster move is coming, what's your price target for Bitcoin by year end? Are we talking $80? A huge $100 K? Maybe even higher?
Let us know in the comments.
Please do.
And, regardless of whether Lee's prediction hits the nail on the head, this whole discussion really highlights something interesting.
What's that?
It's this complex interplay now between traditional finance, global macroeconomics, and these unique crypto market cycles. It's all getting more intertwined. And it makes you wonder, are we seeing crypto permanently mature? Is it becoming a market where institutional analysis and economic principles play a bigger, maybe more stabilizing role? Or will those wild, unpredictable, sometimes irrational forces that defined its early days always be part of its character? Those cycles of massive boom and bust.
A fundamental question about the future nature of the market.
Exactly. Something to chew on as we head into these potentially very interesting final months of the year.